Welcome back to A to Z Equities, where we cover all US listed stocks from A to Z. Today we're discussing American Assets Trust Inc., ticker AAT. We're going to be ranking this company in 5 different metrics: industry, price, growth, financial position, and management. And at the conclusion of the video, we'll be giving this company a rating from 1 to 5 stars based on the average 1 to 5 star scores in each of the 5 categories. So, with that said, let's get right into it, starting with industry. American Assets Trust is a full service, vertically integrated, and self administered real estate investment trust or REIT headquartered in San Diego, California. So, a REIT is a specific type of asset, a specific type of equity, which is basically a real estate fund, a real estate trust divided up into shares and sold as stocks on the open market. REITs are essentially identical to stocks, except that they're governed by certain rules, such as being limited to real estate and the fact that they must distribute 90% of their net earnings to shareholders in the form of dividends or distributions. REITs can be analyzed much the same way that stocks can, and so we're going to be going through this in the same way that we would tackle any other company that is publicly traded. We see here, for additional information, please visit AmericanAssetsTrust.com. So we're going to do that and see what additional information we can get. Now, we really want to see this company's portfolio. What kind of real estate assets does the company invest in? So we see regionally, they've got some, it looks like in Vancouver, Seattle, San Francisco, a big concentration in the LA area. So we see retail, office, multifamily, mixed use. So it looks like mainly retail, office, and multifamily is what they're invested in. We see here retail. This looks like office, more retail, office space, retail, office space. So we see it looks like it's mostly shopping centers and offices. This looks potentially like a hotel or maybe residential apartments. So we see they're pretty well diversified, largely in San Diego or thereabouts, um, Portland. We saw Seattle, and they're spread around a little bit, mostly on the west coast of the US. And they are invested in these various different properties. They own these different properties that they rent out and collect those rents and distribute them to shareholders in American Assets Trust. For industry, real estate is a pretty good industry to be in. It's considered somewhat more stable. The great financial crisis aside, real estate assets are considered more stable, less prone to price fluctuations, pretty predictable business. We see this company is pretty diversified, so they're not too concentrated in any one kind of real estate asset. So we're going to give them 4 stars for industry. American Assets Trust gets 4 stars for industry. Moving on to price, we're going to look at several different price ratios for American Assets Trust and evaluate whether this company looks cheap, expensive, or what. So, starting as always with price, we see that the market cap is 1.95 billion, close to $2 billion market cap. So that's bordering on small cap territory, $2 billion valuation approximately. And let's see how that compares to the company's earnings and other key metrics. So we see in the trailing 12-month period, the company had 440.8 million in total revenue, vast majority of that rental income. So let's divide 1.95 billion by 440.8 million. And when we do so, we get a price to sales ratio of 4.4. So that's the price to sales ratio. Now, let's see about earnings. 4.4 is kind of high, but let's see if maybe the earnings ratio looks more attractive. We see net income 53.4 million in the trailing 12-month period. So we're going to divide the market cap of 1.95 billion by, again, 53.4 million. And when we do so, we get a price to earnings ratio of 36.5, definitely on the pricier side. Let us move over to the free cash flow. Moving over to the cash flow statement, we'll take a look at this company's free cash flow and see how that compares to its price. We see the free cash flow is significantly higher than the net earnings at 104.5 million in the last 12 months. So we divide our price of 1.95 billion by 104.5 million, and we get a price to free cash flow ratio of 18.6. So that's starting to look rather attractive as opposed to the price to sales ratio, which was pretty elevated at 4.4, the price to earnings ratio, which was elevated around 36. And here we have a free cash flow ratio of 18.6, price to free cash flow of 18.6. That's not bad at all. Now let's move over to the balance sheet, and we would hope to see a low price to book ratio for a REIT. The reason being that the whole point of the REIT is the value of its underlying assets. So let's see how the price compares to the book value. We see total common equity is about $1.2 billion. So that means that the assets minus liabilities of the company are 1.192 billion. Let's divide 1.95 billion by 1.2 billion. We get a price to book ratio of 1.636. 1.636. That's not bad at all. You're definitely paying a premium for buying this company. You're paying a premium to its underlying assets, but not such a large premium as to determine this company is overvalued necessarily. So, pretty attractive price to book value. And in terms of the tangible book value, we see that it's very close to the book value. So, we're not going to rerun that number. It's going to be a price to tangible book value ratio of like 1.7 or less, which again, not a bad price to book value ratio, even for a REIT where you generally expect to see lower price to book ratios. So, with all of that said, on the price front, American Assets Trust is going to get a decent score of 3. The price to sales is kind of elevated, price to earnings also kind of elevated, price to free cash flow looks good, price to book looks good. So, we're going to give them 3 stars right down the middle for price. Moving on to growth, let's take a look at what this company's growth looks like. Returning to the income statement, let's see how their sales have done over the years. And we see there has been growth here. Nothing spectacular, but definitely growth from year to year in terms of revenues, from 290 million in 2016 to 310, 326, 362, a dip in 2020, not so surprising, up to 373 in 2021, 418, 436. So with the exception of 2020, which obviously was the COVID year, I would imagine that a lot of the shopping centers were shut down. Tenants may have been protected from eviction in a lot of states that had eviction moratoriums. In the case of residential tenants, the fact that they had such a small dip there and then got right back on the growth track is good. And again, this is not spectacular growth, but it's pretty solid growth, especially for a REIT, which you wouldn't expect to see such high growth for a company like this because, as we said, real estate is a more stable asset that applies on the downside, but it also applies on the upside. So, all that said, this growth looks really solid, but again, not spectacular. Now, let's see about net income. We see the net income growth has been less consistent, but more solid, going from the 30s down into the teens by 2018, going up to 45.7 in 2019. Very inconsistent growth, but definitely at a peak now. I take back what I said about it being more impressive. Looking at this record, not very impressive. net income growth, but solid enough. Moving on to cash flow, let's see how that story has gone in terms of growth. So, the free cash flow, also very inconsistent growth, like with the net income, but they're definitely at a big peak now. The last couple years have had very, very solid growth, and that is definitely going to play in their favor here. We see they've doubled their free cash flows since 2022. Who knows how sustainable that is, but it definitely looks really good on paper. So, lastly, let's take a look at what analysts expect for this company moving forward, what kind of growth they're seeing. And we see that this year and next year, they're actually expected to decline on the earnings front by low single digits. 2026, they're expected to get back on the growth track with 8% growth. Looking at revenue, this year revenue is expected to be roughly flat before getting to 4.3% growth annually in 2025, 2026. So this growth looks pretty middle of the road. The fact that this year they're not growing is a bit of a problem, but they're supposed to get back on the growth track in the near future. So not too bad. Again, the long term story has been good, but not great. So the free cash flow jumping in the last 2 years definitely helps the score here. But we're still just going to go straight down the middle here and give them a 3 for growth. Moving on to financial position, let's take a look at the balance sheet and see how the business is faring in terms of the strength of its balance sheet. This company has total assets of 2.9 billion. We see that their cash position and accounts receivable are a couple hundred million. Let's see what their short-term liabilities look like. We see that accounts payable are only 70.2 million, so they should very easily be able to cover that. Long-term debt of 1.7 billion, and that is pretty much par for the course when it comes to a REIT, because obviously a lot of the properties that they purchase, if not all the properties that they purchase, are financed with debt. So they do have a big chunk of debt here at 1.7 billion. Not too bad, and the fact that it hasn't really been going up is a good sign. It shows that maybe they're able to finance newer purchases out of their existing cash flows. But not too bad, but also a pretty big debt figure here for a company the size of American Assets Trust. Now, let's also see how much money this company is spending on interest. We see that the net interest expense is about 62.3 million a year, a 1.7 billion dollars of debt. That's actually really good, really attractive. If my math is serving me correctly, that's only a little over 3%. That's a really, really good rate, and probably a lot of that debt was taken on in lower interest years. We saw the long-term debt hasn't really ticked up over the last couple of years, so really good number there. All in all, we're going to give American Assets Trust 2.5 stars for financial position. The current ratio looks good, interest expense looks good, but long-term debt is really high, so we're going to give them 2.5 stars for financial position. And lastly, taking a look at management. So, first of all, we see here on Yahoo Finance in the last 6 months, there have been zero insider trades, neither purchases nor sales on the open market for insiders in the last 6 months. That's a positive sign because insider sales are more frequent than insider purchases. So, if they're both at zero, that's actually a plus because you typically expect to see more sales than purchases, which is not what we want to see, but nonetheless what we expect to see. So both of those numbers being at zero is a good sign. And let's see how the share count has fared. And we see up until 2020, the share count was rising. Since that time, it really hasn't risen much. It's been right around 76 million, ticked up from 76.1 million to 76.4 million in the last 4 years. That is not a statistically significant change there. So that's a good sign. The fact that they're not issuing more shares, they're not diluting shareholders. Now, let's see about stock based compensation. We see there's between 8 and 9 million a year in stock based compensation. And that's really little, even for a company that's only $2 billion. That's still way under 1% of new shares being issued to management per year. That's probably the uptick, the tiny upticks in shares that we're seeing on an annual basis. And that's fine. And then down here on the cash flow statement, we see the repurchase of common stock as well as common dividends paid. Tiny, tiny bit of repurchase action annually, less than $1 million annually in buying back stocks, which doesn't really do anything, doesn't even offset the tiny bit of stock based compensation that they're paying. And then we see, of course, like all REITs, they pay a dividend, and that dividend should be 90% of their profits or cash flows for each year. We see those dividends going up. That's a good sign. As we know, the net income has been rising, cash flows have been rising, so that dividend should also be rising, and it is. So, overall, this management team looks pretty solid. We're going to give them 4 stars out of 5 on the management front. So to recap, American Assets Trust got a 4 for industry, a 3 for price, a 3 for growth, 2.5 stars for financial position, 4 stars for management. That yields an average blended score of 3.3 stars, solid above average score for American Assets Trust, ticker AAT, 3.3 stars. This is not financial advice, not a buy or sell recommendation. Hopefully, this video has been helpful in breaking down some of these key metrics for American Assets Trust. If you benefited from this video, please feel free to leave a like and subscribe. Hoping to see you back on another A to Z Equities video in the very near future.